Eric Mwathe at mwathe.com. World market analysis for the weekend of March 12th and March 13th, 2016. Take a look at markets here with about 2.5 hours to go before the close of US markets and other markets. So 2.5 hours to go before the close of Friday's session. Let's take a look at some markets that have closed, and we begin by taking a look at how Asia closed on Friday. We can see pretty much, generally speaking, a positive gain for the markets on Friday. Take a look at European markets after Friday's session. They had a nice gain, and we'll cover that. So we see here nice move, 3%, 3.5 on the DAX, 1.7 on the Footsie, 3.2% on the French CAC. Take a look at the Americas currently, and we are looking at Brazil, that is up about 0.5%. Canadian market is up 0.98. As of right now in the US, again, we are looking at markets here in the US up about 1% on the Dow, 1.3 on the Nasdaq, and 1.2 on the S&P 500. Crude oil is up 2%. Gold is down 1%. So let's take a look at world charts. Let's begin by taking a look at the Australian market. We begin by taking a look at a 26-year monthly chart, and to show you here that we are still showing that the monthly charts have come back to this level that have been support over the last quarter century. Every time market's been bouncing on this level, as we discussed in the prior weeks, every time the market would move above that level with uniform action. Even this here was uniform action. Below the green line, back above it, double bottom support here for those lows. We touched that line there for the lows there, and we see here over the last couple of months, this looks like very nice double bottom support. So as of right now, we are looking at markets that continue to show monthly support, and so the bulls do have control of the market month to month. Just based on this chart, as long as this chart is holding, then that definitely means that we have to assume that month to month the market looks very strong. Now again, just like we did observe last week, we can see here that on the weekly charts we start to seeing some short-term resistance. Take a look at the line connecting weekly highs on the Australian market. Draw a line from there. You can see that if you take the weekly closing highs, we hit that level at the conclusion of the week. So if we can't move above that resistance line, then one can assume that next we might see a swing trade to the downside, just like we saw here. Otherwise, if the market is to move higher, the first order of business would be to move above this declining line on the weekly price channel there. If you take a look at the RSI, there are two lines that show potential resistance. Here, a line connecting recent RSI highs. That's the first line of potential resistance, which is where it closed, or around that level. Take a look at another line coming from the bottom. Extend that line out, and you can see that this was the break line here in August. It was resistance on the backtest failure there for the highs in October, resistance for the highs in December, and now we are back to that backtest level. So if the market cannot move above those two lines, then one has to assume that the next swing trade potentially is going to be to the downside. Be aware here that any downside move that moves the weekly RSI below 50 would suggest a big down week. Could be possible, just like we had a move below 50 here for this big down week, and again another move below 50 here for this big down week. So if you see the market trading below 50 on the weekly RSI, that might suggest that it is the beginning of a strong downside move on the weekly time frame. Take a look at the daily as far as the Australian market is concerned, and here again we see potential for resistance. If you go back and take a look at this break and the RSI here that brought the market off those highs late December, we can draw a line from there and we can see that this is where the market is showing potential resistance. And if we begin the week with a down move, then that would confirm what looks like the formation of a double top here on the daily, which might be a problem. So as long as the red line is showing resistance, one can expect the next swing trade could be down. And in fact, if you go backwards on this red line, you can see that it gives you other sell signal levels here, resistance and a sell signal there, resistance here and a sell signal at the highs there. So somewhere around here could be where this market could stall. And there's also another simple line connecting recent RSI highs, or in fact another simple line connecting recent price highs. If you draw it like that, you can see that just like the weekly, the market needs to clear this line of resistance. Otherwise, if it cannot clear that line of resistance, then the next swing trade is down. So resistance here would mean the next swing trade is down. Otherwise, a breakout above that line would suggest that the next swing trade is going to be to the upside. So we'll see sometime next week the market is going to either confirm resistance or it's going to confirm a breakout above that line, and it should give us the next potential swing trade direction. If we take a look at China, we can see that on the monthly chart, as long as it is positive for the month, it could be coming back to show support of this breakout level here. So there was a breakout here. So that RSI movement did coincide with the price jumping here from about 2,000 all the way to the highs here of 5,200. So we can draw a line from there, and as long as the market is bouncing on that RSI level, which is something it's been doing over the last couple of weeks, as long as the market is holding steady above that line and showing support here, this might be good enough to eventually stem this recent drop and for the market to stabilize. So as long as the market is positive for the month, this is holding, and that might suggest that the downside has been mitigated. Otherwise, if it turns red and breaks below this green line, then that is when one can expect further lower prices. For now, the monthly chart looks like it is stabilizing. One thing we can see here, just like many markets across the globe, is that on the weekly chart there is some type of resistance. If you take the RSI highs on the weekly chart, so right now this is being confirmed as resistance. So we can clearly see that until such a time as the market can move above that blue line, one has to assume that this market is still under downside pressure. Also, we can use the recent weekly closing low for a trigger point, because if the market moves below 2016's weekly closing low, that might suggest that the next swing trade is gonna be for markets to trend lower. So the level to watch there is 2,737.60. Anything moving the Chinese market below that level would be a fresh break, suggesting that the market is still poised to see lower prices, and so anything below that would trigger another round of selling, suggesting even lower prices. If you take a look at the daily, we are still trading below a downward declining 50-day moving average, so net the direction is down. We are also trading well below a declining 200-day moving average, so net the direction is down. On the daily RSI, we can see short-term resistance. If you take the recent highs, connects very nicely with the highs here, and now over the last week or so, suggesting that the market, it makes sense for the market to stay down. Keep in mind, as long as the market is below this line, then that assumes that we still have a lot of downside to deal with, or at least some type of sideways market. We can also see that the market did come back to test the break of 2000 and at the beginning of 2016. This RSI break brought the market during this one-day plunge. We haven't been back to those levels. We've come back, and this line so happens to be around RSI 50. You can see here that resistance on the red line and also at RSI 50 for the highs there. Uniform activity rejection at RSI 50 and the red line for the highs there. So we have lots of resistance levels, suggesting that short term the market is still under some type of downside pressure. Let's take a look at the Nifty, and on the long-term monthly chart we can see that the market has come back on the monthly. As we've been discussing the last couple of weeks, the market is holding very nicely on this green line, and this green line has been very instrumental over the last 25 years or so for giving us lows in the market. Almost all the time we get a major low, this is where the RSI comes into play. And so what I'm getting at is quite obvious here, that we've come back in 2016. We seem to have held that line, and as long as the monthly is holding that green line, then really one has to assume that month to month, here is yet another market that is showing us that this is good enough support on a month to month basis for this market to be eventually moving higher. All it needs to do is clear short-term resistance, and that short-term resistance is a problem. As you can see here on the weekly, number one, we got RSI topside resistance, which the market needs to clear. So simple line connecting weekly RSI highs. You can see that the market did end exactly on that blue line, so that's a problem. So that's one layer of resistance. Also, we can see that there's another line of resistance coming back to back test the break coming into 2016. So the market needs to clear that line too. This was the break in late December, early January 2016. Since that break there, the market has been down. So we have two lines of resistance. One is the one that I'm showing, and of course the other one is the top side resistance. If the market is to move higher, it needs to clear those two lines by moving above both of them. So for now, we're looking at resistance. We have to assume short term the market needs to pull back on a week-to-week basis. On the daily chart, we also have potential resistance. If you come back and take a look at that high, we can see that this is where the market broke this trend line. I guess I can draw it a little bit right there. So this trend line break brought the market off those levels there at about 8,300. So we can draw a line from here and simply coming back to test that line right there. This line so happens to be slightly above or slightly below 61.8. It was also a problem here at the highs of late December right there. So we are coming back here showing potential for resistance. If the market can clear that line, that's good for the bulls. Otherwise, this line has been a problem even going back. As you can see here, gave you those highs there, rejection on this line for the highs there, and again here, all these have been highs, and the market is coming back to test that level. So clearly we need to take out that red line if the market is to move higher. What we can do is use last week's daily closing high. So we come back here and there's a high here from the past week. If the market can clear that line, that could set up the stage for a nice move higher. So the market needs to clear that daily closing high. If you want to play the market for a swing trade higher, the market does need to move above the recent close of 7,531.80, which is the high of last week on a daily closing basis. Anything above that, and maybe the market is going to be finally having enough energy to clear this red line that has been a problem. So a breakout does need to take place above this number for a short-term move to the upside. Otherwise, if you don't get a breakout above 7531.80 and a resistance confirmed on this line, then potentially the next swing trade is going to be to the downside. We can also see that short-term, and this is something we're going to see in many markets here, that we've been making improving highs on the hourly chart, but the RSI has been making lower lows. That negative divergence could be setting up for a pullback. If you take a look at the South African market by way of the Dow Jones South African Stock Exchange Index, here we can see that over the past month it has come back and showing support on the 50 level there. That's very good support. As long as this is holding month to month, this is yet another layer of evidence that markets month to month worldwide could be potentially setting up to move higher in the coming months, as long as that's the case, that they are holding on the monthly charts, like here, holding on the RSI 50 on the monthly. Now that's true for the monthly. If you take a look at the weekly, we see short-term possibility of short-term resistance. You can see here that if you take the weekly closing high there, draw a line, you can see that the line is coming and making perfect contact right there with the closing high from the past week. So as long as this is being confirmed as resistance, one can expect the market to trend lower. Otherwise, bulls would like to see the market come and take out this obvious line of resistance. We can also see that the RSI is coming back to challenge a previous line of resistance. Take this breakpoint here on the weekly that brought the market off the highs during this gap down. Draw a line from there, which is our uniformity line, and you can see that this was double top rejection for the highs there, rejection here for the highs here, and now it seems to be rejection on that line, suggesting that week to week this market has a lot to do. Otherwise, the next swing trade here looks like it's down, unless and until the market can clear that red line. Let's take a look at the Footsie. After a strong showing on Friday, we can see that the monthly continues to hold the support line on the monthly, as we've seen in other markets. So the line is somewhere around there. As of right now, we continue to show that the monthly chart is showing support, and as long as this is support taking place here, that is good enough month to month to move markets higher. We can test that here. We can see there was support here for the lows right there. The market went to new highs. We bounced off this level in 09, market went higher, entry there, again off 03 lows, the market recovered above that line, which is somewhere here. All these have been successful. In fact, you can even go a little bit backwards, something like that, and it comes close enough to these lows here for the lows of 92. So as long as this is holding here, one has to assume that as long as the month is positive, that this line is holding, and that markets are still looking to go higher month to month, unless down the road we break through this red line. If you take a look at a 3-year weekly chart, so 3 years worth of weekly data, and take that weekly closing high and this weekly closing high recently, you can see that you draw a nice line like that, and that line gives you all these highs here, intra-week highs there, resistance here for the highs there. We touch that intraday, and now this seems to be resistance. So clearly, if you're a market bull, you'd like to see the market clear this line of resistance if the market is to go higher. If you take a look at this 3-year weekly chart, you can see that if you take the RSI highs like that, we've come back and we are showing resistance on this red line. So until we can clear that blue line, this market is still very suspect. Now let's take a look at a two-year weekly. So instead of 3 years, let's take a look at 2 years worth of weekly data. Just want to show you, recently we had broken through here. That break brought the market off this highs here. We haven't been back to those levels, so we can draw a line from there which should give us any future resistance level. And as you can see, we've come back and we seem to be showing resistance on that level there. Keep in mind that the market here, as long as it is showing resistance around RSI 50 on the weekly, that suggests that the next swing trade is down. In fact, if you test this line going backwards, you can see that there was a break here for a swing trade lower. There was another break here for this swing trade, and there's another break here for this swing trade lower. So as long as we're below the red line, one can assume that the next swing trade here is still to the downside. If we take a look at the daily chart on the RSI, we can see that the RSI needs to clear this line of resistance if it is to move higher. So it needs to clear this line of resistance if it is to confirm that market bulls are in charge. Otherwise, the more we continue hitting this line, the more we are going to have to pull back. In fact, if you take a look at an hourly chart, you can see that while the market was making higher highs this past week here, the RSI was making lower lows. So short term, looks like the market is still showing topside resistance every time it tries to rally, and yet on the downside there seems to be some type of support. You can see that this short-term break, this movement here in the RSI began this nice recovery leg, and the market's been higher since. If we draw a line from here, you can see that it perfectly gives us recent lows here for those lows, and then again here for yesterday's lows. So on the bottom side we got support, on the top side we are dealing with resistance, and so I think we are stuck in a range, in my opinion. At some point bears would like to see a break of that green line to suggest lower prices are in the offering, and market bulls would rather the market eventually break out above this blue line of resistance. But if you are confused, and who isn't, the best thing to do here is wait for the market to clear. If you want to play the market to the upside, you'd rather take a look at the 3-year weekly chart, wait for a breakout above this obvious declining line on the weekly. So that would, any breakout above this blue line would suggest that finally the bulls are in control. For now, it looks like net the bears are in control because the market has been unable to move above this topside resistance on its weekly RSI. If we take a look at the Canadian market on the monthly, to be consistent with other markets across the globe, you can see that here is the line that has been used by this market going back to 1990, and I'm sure even beyond. But here we can see that from the lows of 1990, the market held that green line for the lows there. We touched that line for the lows there in 93, 92, for the lows of 98. We finally recaptured with a breakout here above the green line for beginning of a nice move off all 3 lows. Uniform action below that green line and back above it for a re-entry here somewhere around there. We touch that line there for the highs there, for the lows there. We touch that line for the lows there again, and we can see here we went above the green line and back above it with uniform action. So month to month the market looks good, just like we see in other markets. Take a look at the weekly, and recently we saw a short-term breakout after this line was a problem. This line was a problem for many months. Finally we cleared through that, which began the move over the last 4 weeks. Okay, so that was a good breakout short term. But I think what's going on now, that we've had a nice move from the lows here of 11,500 to the current highs of 13,500, about 2,000 points. I think we're due for a pullback, and I show you why I think that is. If you take a look at the break line here on the RSI, which was in May, off the highs there, we can see that the market is coming back to test that line of resistance on the weekly RSI. So we can just draw the line like that. We can see that if this is confirmed as resistance, one can expect a reversal around current levels. As we come into the conclusion of Friday's session with about 1 hour to go, about 2 hours to go here, we can see that the market is making a nice move to the upside, up 1.2%. But we can also see that the RSI is making a slight lower low, and at this rate one can expect a pullback from current levels after a nice run. Take a look at the 30-minute chart for the Canadian market, and here again we can see an improvement in price, but the RSI is still not making a higher high. So that could be good enough to stem the current move higher, and that market short term could be looking to pull back from current levels. Let's take a look at the Brazilian market, which is up an amazing about 16% gain for the month of March, and we are early on in the month of March, and you can see here that the RSI on the monthly held on this green line, which has been support. So the monthly chart did show support, and now we are having a good recovery month to month. And we can also see that there was a slight negative divergence as prices went lower month to month. The RSI held, and that has been good enough to bring this recovery attempt. I think we can also start looking for a potential pullback, because this has been a good move off the lows here, and now close to the lows were at about 3,700, coming back to test the 5,000 level. If you take a look at the weekly, you can see potential for resistance around here, going back to the break line here in September of 2014. So somewhere around there was a break which brought the market off the highs. We can draw a line from there, and it should give us sell signals down the road. And so there you have it. It gave us sell signal here for those highs, and now we are coming back here potentially at around 5,000. This could be where the weekly chart might show that this is where we start stalling. Otherwise, with about an hour and a half to close, let's take a look at the SPX hourly, because it does look like other markets we've seen on the hourly. Lots of negative divergence. As you can see, the market here has been trading at the highs for the week with an improvement in price on the RSI, and here, an improvement in price, yet the RSI continues to make a lower low. In fact, the RSI has refused to go above 61.8. RSI has not moved above 61.8 as the market has made an improvement in price, suggesting that this is the worst type of negative divergence short term. Net, as long as this negative divergence remains, one can expect that the next swing trade for the market should be potentially down, as long as we have this negative divergence. Be on the lookout for part 1 of this weekend's US market analysis. Eric Mwadhi, Mwadhi.com. As always, good luck, peace, and blessings. I am out.